a big reason why we are well off the lows of the day was on news that the White House is saying that it is open to more stimulus measures, not exactly what the Democrats put forward, but they are open to more stimulus measures going forward. So to help us make sense of the action that we are seeing in the markets today and over the last couple of days, I want to bring in Bob Doll, Chief Equity Strategist at Nuveen. And Bob, what are your thoughts on what we're seeing play out in the markets over the last couple of weeks? Because it almost seems like to me that there's a tug of war going on between weak fundamentals that in some cases is getting worse. And then there's also this hope for more policy that we're seeing drive the markets today.
I think you're absolutely right. It's like an epic battle. You think of a boxing match. In one corner, you've got the $8 or $9 trillion of stimulus with more to come. And the other corner, you've got the collapsing economy and earnings, and they're duking it out. So far, the stimulus has won the case, at least for the market, all the last few days. I think the other side's being heard from. And I think that epic battle is going to continue for some time, and we're going to have some volatility in both directions till we have more data points down the line, because there's no question the stimulus was fast and furious, but there's no question this recession is deep, but hopefully brief.
Yeah, Bob, I wanted to ask you just about some of the, I guess, the pattern that we've been seeing in the markets, because on a day-to-day basis, and I saw this in your notes, you're talking about the fact that we do see volatility on a day-to-day basis, but overall, the markets haven't moved much. Why do you think we are range bound at this point? And I guess how much longer do you expect that to continue?
Well, I think we're going to be range bound, meaning kind of 5% either side of the 2,800 level for the S&P, maybe for some time to come. Remember, we had the 35% abrupt down in about a month, and then we had the literally 35% rally in a couple of 3 weeks. And the market's catching its breath and say, let me figure out all these variables. I mean, on the one hand, you've got, a month ago, people in states where the number of cases of coronavirus was declining was only 25% of GDP. Now it's approaching 80% of GDP. So you get this optimism about the opening up of the economy, but then you get the other side saying, but wait a minute, not too fast. We're going to have more coronavirus cases. How long will it take for the stimulus to hit? So I think it's going to be a lot of back and forth as the market figures out slowly but surely how long will the recession last and what will the economic and earnings recovery look like.
Yeah, and Bob, one of the key factors of that is when you take a look at the labor market, and that number that we got out today is obviously very concerning. Another 2.9 million Americans filing for unemployment last week, bringing the total to more than 36 million people losing their jobs since the start of this coronavirus crisis. How do you read this number? How does the investment community interpreting this number? And I guess big picture, when do you expect us to see an eventual recovery in the labor market?
Yeah, great set of questions. So there's no, I don't think this is a surprise. The number was, a little bit worse than the consensus expected, but that we're still losing a lot of jobs shouldn't be a surprise. As you know, we only report unemployment once a month, and we have at least one more month, meaning the June report for the month of May, that's going to be a significant increase. After that, I think we will slowly see it come back the other side. It won't come back as fast as the economy. My view is April will go in the history books as the low point for the recession. Now, that's not going to say May, June, July are going to be leaps and bounds higher, but slowly but surely. This reopening will be bumpy. It will be controversial. It will be fits and starts. And the market will have its days where it says, yeah, this is great news. And other days, why is this taking so long? And therefore the volatility in both directions.
Bob, one thing that jumped out to me in your note, and you briefly touched on it, was the fact that you expect us to see a second half recovery, or we will start to recover, I should say, in the second half of the year. But you also went on to say that investors may be overly complacent when it comes to near-term risks. Can you help walk us through that and what exactly some of those risks are that you're mentioning?
Sure. So let's start with the market. We had a recovery that was bigger than most recoveries after waterfall declines. Usually you pick up somewhere between 20 and half of what you lost. Well, we picked up 65% of what we lost. So at 2950 on the S&P, where we were just a few days ago, our view was people are just a little too complacent about some of the issues. What are the issues? How long will the stimulus take to make a difference? Are earnings estimates down far enough, particularly for 2021? My guess is probably not. They've got to come down some more. Coronavirus, reflex. We're going to see more of it. Probably yes. The China issue that you referenced earlier. What does that look like? We're going to have trade issues with China. These are things that the bears will rattle the cage from time to time and be heard from, and therefore we got ahead of ourselves, in my view.
Yeah, Bob, and when we talk about the fact that we could get ahead of ourselves, what exactly is to come over the next couple of weeks? You mentioned earnings, and when we take a look at what we saw, this is a pattern that we've been talking about, many of these companies withdrawing their guidance. So it's offering a little bit of uncertainty and a clouded picture, at least when we look short term. I guess, how are you factoring this into your market strategy at this point and when you're trying to identify different areas to invest?
With great difficulty. The earnings environment is always uncertain, but it's extra uncertain. That's why companies are withdrawing their guidance. So whether it's an analyst bottom-up number or a strategist top-down number, you've got to ask a lot of questions about what the assumptions are inside of that. And therefore, we think you have to try to find those companies where you can have some relative certainty that the numbers are coming through, that the cash flows there. This is why healthcare and many parts of technology have done well, because the earnings are still there.
Bob, I also want to get your thoughts on another topic that has resurfaced this week, and that's negative rates. We had President Trump tweet about it earlier this week. Fed Chair Jerome Powell briefly commented on that. What are your thoughts on that? First, do negative rates work in your view? And is this something that you see coming to the U.S. at all in the future, in the near future, I should say?
Well, I'm hopeful the answer to that question is no. I think the proper response to the issues we have in front of us is largely what the Fed has been doing. That is buying securities, providing liquidity. Negative rates, we have limited number of experiments, and I think the jury didn't work so well for Europe and Japan. So I hope we don't go there. I don't think it's appropriate. I don't think we need to go there.
Bob,
I'm glad Chairman Powell said he's against it too.
Yeah, exactly. And I think a lot of people will agree with you on that front. When we talk about what could lead us out of this recession, technically, or I guess a lot of people are saying that we are in right now, when we do see that recovery in the second half of the year, what sectors or any specific names do you expect us to lead the recovery?
Well, first, an observation. As you know, in the last couple of days, and it started it this morning as well, we saw the value stocks, the cyclical stocks, the small stocks continue to lag big time. We've had days when they've done better. I think it's going to take better economic growth to hear from those things again. I'm encouraged that this morning value was way behind growth. Now value is ahead of growth. We had a switch during the course of the day, led by some cyclical areas, banks, energy stocks, as you will. I think that for us to sustain that, we need some better economic news. So my view is you don't need to take a big stand on that. You need some health care. You need some technology in your portfolio, but have a bank or two in there for the cyclical recovery.
All right, Bob Doll, Chief Equity Strategist at Nuveen. Thanks so much for taking the time to call in today.
All the best.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.